All right, here we go. Another day. We are live. Let me wait a few seconds for some guests to join. Just give it a couple of seconds. Hi, I'm Mike Patel with Home Savvy Central. We have an exciting program today, and I say that every week, so I should trademark that. We have an exciting program today, and it makes it exciting today because we have a very special guest. Our topic is, and I'll introduce the guest in shortly. The topic today is the Fed's next move could shock the housing market. Is the rates going to go up or down, way down or way higher? We don't know. So depending on what happens and how the buyers react, it could turn around the whole housing market. And I just found out that tomorrow is the big Fed's meeting tomorrow. Hopefully, they will drop the federal funds rate, but there's no guarantee that the mortgage rates will drop as well. I also found out talking to a lender today that when the lenders and the institutions and the banks find out that they're going to be dropping the rates and the Fed's meeting is there, they already drop it ahead of time, 10 days. So as you might have noticed in the last few days, the rates have already dropped. So don't expect them to drop any further. That's what the lender told me. But let's carry on. I want to introduce our guest today. Ivan is our guest. Ivan Hernandez is our guest. He's in Fort Lauderdale. I'm meeting him for the first time, although we've talked several times. He's a trainer and the board of directors of NAHREP. But Ivan, rather than me saying about yourself, why don't you take a few seconds, introduce yourself, and then we'll get into today's topic.
Absolutely, Mike. Thank you. And everyone, thank you for joining us tonight. It is, almost 8 o'clock here in the Eastern time zone. So thank you all for just making some space out of your busy schedules to see us. And I am the sponsorship director for the NAHREP West Broward chapter, the National Association of Hispanic Real Estate Professionals. I also do training, and I like to concentrate on the newer agents, the ones that are coming onto the field, but I've been in the business for 8 years, and I'm licensed here in the state of Florida. Right now, I concentrate mostly on training, but it's still wonderful to talk about what's relevant in today's industry and in our market. So thank you for having me.
Cool, nice. And you also train a lot of agents, right? Are these newer agents or all kinds of agents or?
All kinds of agents. Mainly, I like to concentrate on the newer ones. And the reason is because once you leave real estate school, you know laws and you know how to conduct a transaction. But as far as knowing what's happening in the marketplace, that's where I come in. And I really like to bring up to speed all of the agents with technology, with current events, with also how to prospect, talk to consumers, so that kind of thing.
I see. Okay. So if I was a new agent today, or a viewer is a new agent, what are they thinking? I know you've talked to them. What are they thinking going ahead? We've seen the market go up and down. The COVID changed everything. Then we've had this high 6 million home selling in 2023. We're down to 4 to 4.5 million home sales. When a new agent comes in, new realtor comes in, what is their thought on where the market is headed based on your conversation with them?
Yes, great question. So when a new agent comes in and they get out of real estate school, they believe that as they are prospecting consumers, the process of getting a home is much quicker. But this is where knowing how days on market goes, how many average days it takes to sell a home, also the time that it takes after an offer is accepted to do appraisal, inspections, maybe even negotiations, which we're seeing a lot in today's market. And that's the beauty about this current time, that as interest rates are coming down and homes are staying longer on the market, this is making it a great opportunity for buyers to really flex their muscles and ask for better conditions when it comes to closing on the home. And this is what extends that time frame. So when I have conversations with the agents that I coach, they said, no, I thought it was going to be much quicker to close on a home, but they're little by little understanding that this is actually very favorable.
Right, exactly. So, we want to get into the important topic about the Feds and how it's going to impact. But before I do that, I know Florida has been the ignition point. A lot of people are saying, if anything going to happen with the crash or whatever, it's starting in Florida. And we know that Florida has gone through tough times, not because of disaster, but the insurance crisis and the homeowners crisis, and then the SB, I think 114 bill or whatever where you have to have that inspection for those tall buildings over 3 stories. All that has happened, and Florida went through tough times. There was a lot of homes for sale. At one time, there were 40,000 vacant homes for sale. A lot of investors and sharks and developers bought homes cheap last year. But you coming out of it, inventory was way high, but it's slowly coming down, and the prices have dropped. Where do you see the Florida market going in the next year or so, based on what's happening out there?
Yes. So the Florida market right now, it's bringing a lot of buyers that have been on the fence. And this is primarily happening because the interest rates are coming down. So going back to the conversation we had before about the agents that I mostly coach, it's now the buyers are getting into an opportunity where they can ask for those extra discounts, but also it's a very good opportunity to buy condos. As you said, there were some things that needed to be revamped when it comes to condos after a couple of incidents that happened back in 2024 or 2023, actually. But this is allowing for stronger laws when it comes to condos. And as things are starting to come naturally and normalizing, this is presenting a good opportunity for buyers to get a very good price on a condo.
Right.
I think that right now it's perhaps the best time to purchase condos because of their lower cost compared to other years. But it's also a good opportunity to buy single family homes. And at least here in South Florida, in my market, the price of single family homes has continuously increased through the past years. It hasn't come down. So for folks that are looking for a piece of real estate that it's going to have and consistently appraise year after year, single family homes are also a great fit.
Right. Especially if the rates drop, in this next couple of weeks, and hopefully, I think there's another Fed's meeting. One is tomorrow, and I think there's one in November or December. Hopefully, there'll be a more price reduction. But my concern is if the rates drop significantly, it's going to increase the price, because if the rates drop, let's say even by 1%, or if it drops under 5.5%, what the National Association of Realtors is saying is that if that happens, you will have 2 million additional buyers coming into the market. That'll flood the market. That'll have multiple offers. That'll increase the price. So you have that small window where you want to buy it before everybody else comes in. But let's see how it plays out. So going back to the topic that we have, I'm going to read a quote. It says here that the Federal Reserve just revealed a tool that could quietly change your mortgage rate and maybe the value of your home. But it's not the rate cut everyone's waiting for. If you're a homeowner right now, this could be one of the most important conversations you'll hear all year. So, by the way, if you're viewing live, or a lot of my viewers watch the recording, I want to ask you a question. So do you think the Fed will lower the rates again in 2026? But before that, do you think they will also drop it by the end of the year, and by how much? So if you want to guess or say what your thoughts are, make a comment. And if you have any questions as we were having a conversation, just drop it and we'll try to answer that if we can catch your comments. So we're here to answer questions. We would like to collaborate with you. So feel free to ask any questions. So let's get into it. So if the Fed's, if the rates drop, what's going to happen? So I'm going to start. Let's look at the current interest rate. Let's start with that just to quickly. I'm going to show a chart just to see what's going on as of this week or so. I'm not going to say today, but rates a few months ago were 6.4, 6.5, but this week it's around, a 30-year national average. 30-year is 6.23. I'm assuming you can see the screen here, right?
Yes.
Right. Okay. So that's perfect. It's 6.23. Of course, that's an average. This one right here is a national average, was 6.9 back in June. It was almost 7% in June, and now look how low it has gone, 6.23. Of course, if you get a 7-year loan or a 10-year loan, you can even drop that further. But that just goes to show you how much the rates impact. That'll bring in more buyers. Let's look at another chart, and we're going to talk about, let me share that again here, and then we'll discuss on that. See, share screen here. Just give me 1 minute. Sorry about that. Share screen. I want to look at Zillow report. And the reason I want to do that is because a lot of buyers have been waiting and waiting. So if you're a seller, sellers want the prices to hold or even go up. And the prediction is that in 2026, 27, 28, 29, home prices are going to go up nationally. Some pockets may be down, some pockets may be higher, but on average, they're going to go up. But let's see what Zillow is saying, Zillow home values and home sales forecast. So we know what will happen. And this will be more changeable if the rates drop significantly, and they'll throw all these forecasts away. But right now, what Zillow is saying, and I'm assuming again that you can see my screen because I'm using another screen here. Sorry about that. The key takeaways: home value growth is expected to recover in 2026 after a flat 2025. What they're saying is in 2024 and 2025, home sales, the unit sales dropped significantly, right? I think in 2024, I think it was around 4.2 million. At the peak time in 2023, it was almost 6.2 million. So we've seen a big drop in home sales, unit, that is by units. Home sales are forecast to end the year at 4.07 million, slightly above 2024. Wow, which is very low. Ivan, what do you think? Homes going from 6 million to 4 million, is that did that take a toll on a lot of realtors and the real estate industry in general? What do you think?
It took a little bit of a toll. However, one of the things that I'm seeing is that this is balancing the market, because if we go back to years like 2021, 2022, that it was pretty much FOMO, fear of missing out, buying a home. Yes, at the time, the interest rates were very attractive, and that brought a landslide of buyers. So that generated appreciations in many areas of the country that now are starting to stabilize because some of these were a little excessive. In other areas of the country, it's starting to make a rebound. And one of the things that I'm seeing is migration patterns. So areas that in the pandemic, individuals fled, those areas are starting to come back. And this is starting to normalize the pattern of what it is to have a stabilized market, which is not so much heavily in the scale, tipping the scales towards the sellers, but now it's starting to level off so that it's also balanced for the buyers as well.
Absolutely. Yeah, that's a great pointing out that. Rents should continue to cool, ending 2025 at lower growth than in the past years. As home prices go up, rents go up. And if the home prices go down, rents go down. So, it's a cat and mouse situation. Let's look further on what Zillow is saying here. Home sales should end the year relatively weak as well, posting numbers very similar to the multi-year lows seen in 2024. Zillow's forecast for 2025 National Association of Realtors existing home sales is now at 4.07 million, which would mark a 0.3% increase from 2024, but is slightly below last month's forecast of 4.1 million. Of course, forecasts are just that. They're forecasts. They're never accurate. Sometimes they're even way off.
Yeah.
In fact, Zillow last year said that 2025 home prices were going to drop. But then when they did not drop, they changed the forecast to saying that the 2025 prices are going to go up. So now they're saying it's going to go up. So, they have their numbers and the data's change, markets change, and, the interest rate change and the Feds change, and everything's changing. One thing I want to note today is I had a live on TikTok, and one of the questions that I got from one of the viewers was, what's going to happen with the increase in price or lowering the rates, and what if I don't get a job? So should I buy now or should I wait? I said, I don't know. That's your situation. Talk to your lender, talk to your accountant. But one of the things is it's better to buy now than chasing the market, because if you're waiting for the interest rate to drop, if you're waiting for the home prices to drop, and let's say your home prices do drop, rates do drop, but what if you lost your job for a few months? You didn't have a job. You're going to have a hard time getting a loan. What I'm getting at that is there are a lot of job layoffs going on. I just read today that Amazon is going to lay off 14,000 workers. And because of that, UPS is also going to lay off thousands and thousands of workers because they have less deliveries. Microsoft is laying off, and we're talking 10,000, 5,000, 15,000. This is globally, but most of these employees are in USA. A Starbucks is laying off 900, but guess what? They're closing 500 shops, stores. So we don't know what's going to happen. So when it comes to selling, should you wait for the market, right time to sell? Is it the peak time? We don't know. But if I'm a seller, I'm going to think, look, I bought my house 5 years ago or 20 years ago, and my home price is way up here. Should I sell now or should I wait here? Or is it okay to sell slightly lower? You're still way ahead of when you bought. So you have to think long term. All I say is sellers don't get greedy and the buyers don't get too greedy. Buy when you are ready, willing, and able to buy, or ready, willing, and able to sell and buy. That's my take on it. Do you have any comments on that, Ivan? How would you advise somebody? Not an advice, but what's your thought on that?
Yeah, no, my thoughts on that is when it comes to it, what you say is actually spot on with the current situation with some employers.
Mm-hmm.
They are laying off some people. I don't expect unemployment rates to increase that heavily,
Mm-hmm.
and that's going to keep the interest rates for mortgages somewhat level or just slightly below what we're seeing.
Mm-hmm.
Somewhere, nothing to exceed less than 5.5% is what my take is based on what
Okay.
I read. But here's the important part to consider, especially if you're a buyer. And this
Mm-hmm.
also should be useful information for sellers and to think, okay, right now it might be the time to sell.
Right.
So many times when buyers need to apply for a mortgage, they're going to be asked to provide proof of stable income,
Mm-hmm.
meaning a job or a W-2 job, right? If
Right.
you're currently employed, um, not knowing what's going to happen in the upcoming months, it's still a good opportunity to maybe reach out to someone from your bank, a mortgage professional, and just inquire into a pre-approval or a pre-qualification just to
Mm-hmm.
see what you would qualify for. And then
Right.
if it's an opportunity for you to get approved for a loan, I
Right.
would right now, especially right now, take advantage of the current trend that the interest rates are going down.
Right.
And if right now you're in a situation where you have stable employment, definitely use that to your advantage because that is something that lenders require that you have prior to closing.
Right. Yeah, they want a stable income. They want to see there was no gaps in there, but they understand if you change the jobs, you got laid off and got something right away in a similar kind of in a similar kind of industry, right? You don't want to be a pharmacist, then you got a job as a Home Depot guy or whatever. So they want to see that you're in the same field, same
Right.
income. They want to see the normality, right?
Yeah.
That's how they look at, right? So
Mm-hmm.
yeah, right. So I wanted to share another screen here. Let me see here. It's from Realtor.com, and we were talking about, the title of my topic is the Fed's next move could shock the housing market. One thing we have to look at, and what the Realtor.com is saying, and this article came out in the summertime, is that it's a cruel summer. Why the housing market is stuck. I'm hearing a lot of conversation right now about the market is frozen. Sellers want a higher price, buyers don't want to pay the higher price. And the confusion is, here's the confusion, Ivan, and this is when I have conversations. We know that the inventory has gone up sky high, 30 to 40% national average. We know that it used to take 30 days to sell a home. Now it's taking almost 90 days to sell a home. But when those two big guns are there, prices should drop, but they're not dropping, they're going up.
Mm-hmm.
Right? So there is what we call a standstill. It's a cruel thing. The houses are frozen. That's what they're talking about. So let's look at what they're saying here. It's the Anna Karenina housing market, whatever that is. I'm sure I don't know what that is.
Mm-hmm.
Inventory is up, sales are down, and everyone from buyers to sellers to builders is unhappy in their own way. The journey from pandemic era extremes to a more balanced market has been frustrating, but a slow road is far less painful than one filled with sudden volatile swings. Let me read further what it says here. The US housing market is stuck in neutral. Inventory has climbed for 21 straight months. Prices have stabilized nationally and have fallen from COVID-19 pandemic highs in many once booming metros, yet sales remain at multi-decade lows, a sign that buyers and sellers are still far apart, with buyers squeezed by high mortgage rates and the sellers slow to adjust expectations. What's your take on that? I mean,
So one of the patterns I'm noticing is home appreciation year over year. And that's the beautiful thing about real estate and knowing how it's a safe harbor for investments. Consistently, real estate has provided appreciation for many, many years.
mm-hmm.
So if you want to put your money into something that is going to appreciate in the long term, real estate is a great way to put your money. Also, the other thing to consider is that in some markets, especially around the Sun Belt states, we are seeing that prices are declining. And this is because during post-pandemic, some of those areas, the prices did increase in ways that were not balanced.
Mm-hmm.
So that is allowing for markets to balance themselves out. And one of the things is it's providing with, in some markets, an opportunity for buyers to, and as the article in there says,
Mm-hmm.
go from neutral and maybe get it revved up again. There's also things to consider for negotiations. And you said something that was key, Mike. There's additional time with negotiations.
Mm-hmm.
Additional time where the homes are staying on the market.
Right.
So as a buyer, this provides you with flexibility
Mm-hmm.
to negotiate. And that's where you want to make sure that you are next to a knowledgeable real estate professional that can help you with those negotiations.
Right.
And also look into other ways to decrease monthly payment amounts. And seller credit, seller concessions, things like that come to mind. But those are ways to maybe get the market from what you say, and it's true in some markets. It's in neutral, but there are ways to get it going again.
Right. Yeah. And you're absolutely right. Buyers are stuck. And one of the things is, it's not that the buyers are waiting for the prices to drop or they're waiting for the market to crash. Buyers simply cannot afford the homes they want to buy. I have 3 or 4 buyers who really want to buy in California. I'll give you an example, and we'll go through this later on the screen I'm sharing. But first, let's talk Anaheim Hills. I'm in Anaheim Hills, right? The median home price is $1.2 million. You get a 4 bedrooms, 2,000 square feet, 30-year-old home. That's what you get. And it's not a lot of a house, but it's 1.2. If somebody wants to buy this house, their mortgage payment is going to be about $7,000 or $8,000 a month, right? You better be making $20,000, $25,000 a month to be able to afford it. Let's look at the national median home price, and I'll get to the point why there is a standoff and why there is a freeze. Here's the reason. The median home price in USA today is around $420,000, right? The median household income in USA right now is about $85,000 to $86,000. Houston, we have a problem. If the median home sales or median income is $85,000, they cannot buy a $420,000 median home price. The income has to be around, depending on the interest rate, around $120,000 household income to purchase a median home price. So that's the problem number one. In fact, 60% of households in America cannot afford a house over $250,000. Now you tell me, Ivan, where the heck can I find a $250,000 house?
It's challenging right now.
Exactly.
Yeah.
So that's problem number one, is that most of them cannot afford it. But the issue is affordability. And let's look at this article. What they're talking about is exactly that. People want to buy homes. The good families, they work so hard. They're working double. They have side hustles, wife, husband, or 2 brothers, 2 friends working hard, trying to save money, trying to pay off. They just cannot buy. It's the housing affordability crisis. This article is from CBRE Investment Management, came out in August, and it says here that housing affordability in US has reached a crisis level and is dominating US residential market dynamics. In this piece, we explore how the situation developed and over decades worsened in recent years, along with solutions to dig out of the housing supply hole and the implications for investors in the US residential sector. Of course, CBRE is a commercial firm and they're talking from the investor's point of view. But let me read another paragraph here. Homeownership is increasingly unaffordable. Rentals are a solution. Home prices rose significantly in recent years, and affordability has reached crisis level as incomes did not keep pace and mortgage rates have soared. So here's another thing. According to the chief economist Lawrence Yun, last year mentioned, or I think it was this summer mentioned, that the affordability crisis is worst in the last 35 years, actually last 42 years. It is that bad. People just cannot afford these homes. They cannot afford the mortgage payments. Even if the lenders give them the 40% DTI or 45% debt to income ratio, they still cannot afford it. And to make matters worse, property taxes, insurance, home insurance have gone sky high, and that makes it even more difficult to buy. Especially Florida, right? What's been happening with the property tax and insurance in Florida? Isn't that a crisis there?
Yeah, there have been some challenges when it comes to that.
Mm-hmm.
And there's legislation that right now is hopefully in the process of being adopted by the legislation.
Mm-hmm.
One of the things that it's interesting that you mentioned is where can people still find affordable homes? And it reminds me of what we started talking about when we began tonight's show. At least here in Florida, I also think that condos right now, just because of the normalization of legislation that led to prices of condos decrease, right now, that's a good opportunity for those
Mm-hmm.
individuals that are going through affordability crisis to
Okay.
get a piece of real estate.
Right. Okay. Yeah.
But there are some challenges, as you said,
Right.
absolutely.
Right. What about the increases in assessments? You know, a lot of the condos had assessments where they are paying 20,000, 25,000, 50,000 upfront. Has that gone, or is it still around, or is it gone?
There's still some homeowners, in this case, condo owners, that are going through that. However, there have been situations in which they've been able to negotiate maybe some of those assessments a little bit down. Or there have been investors that have gone into the market and been able to pick up those properties because the prices in general have gone down. So in a way, it's balanced out.
Okay.
And some of those extra premiums that, let's say, 2-3 years ago still needed to be paid for assessments have now been balanced out because the price of the condos themselves have gone down.
Right. Okay. So it's kind of corrected, which is good because Florida took a big hit, but I'm glad Florida is coming out of it, which is good news. You know,
Yeah,
because the last thing we want is any state to go down, and that's going to have a different impact.
of course.
Um, because if the Floridians cannot sell homes, especially the baby boomers, there's what 38% of homeowners there are baby boomers. If they can't sell, they're not going to buy, or they're gonna not going to pass on that money to their younger generation, who then spend. So we got to keep that momentum going. You know. So
Exactly.
right, right. Okay. So on this article, I'm going to continue from CBRE regarding the affordability. Let's look at this graph, which is pretty shocking, actually. Despite the highest mortgage rates in more than 15 years, U.S. home prices reach fresh all-time highs in April 2025, according to S&P CoreLogic Case-Shiller U.S. National Home Price Index. Housing price compared to income is now at an all-time high. Home prices to medium household income have risen fivefold. The cost of buying a new home is also hitting new highs since 1985 peak. Since 2019, the income needed to buy a single-family home has doubled. Wow, I didn't know that. Let's look at this. The green graph here shows the home price to the income ratio. Right now, the home prices are high ratio-wise, and look at where the income is to qualify. So there's a big gap here. They should be neck and neck, which they're not. See, in 2012, in 2008, a lot of people could afford homes because the prices were down. So there was a lot of sales going on there. But right now, home prices are high and the affordability is high. They go hand in hand. The higher the price, higher the interest rate, less affordability is there. And that's causing the freeze in the market. I'd like to find out, if you're watching this, what's happening in your neighborhood. Do you see the home prices going up in your neighborhood in the next 6 months, or you think they're going to go down depending on where you are? We are hearing that the Sun Belt areas are all having price drops, and then a lot of the Northeast states or the areas are having price increases. So let us know. Be glad to find out what's happening out there. Let's look at one more chart if there's something worth looking at here quickly. Yeah, supply does not meet the current demand. So let's talk about this. Even though there's not enough buyers buying, there is still a shortage of inventory. And we talked earlier where inventory has gone up 20-30% from a year ago, year and a half ago. There's a lot of inventory. But if you look at the normal inventory, it's still lower than your normal, right? Pre-pandemic.
Yeah.
Over the last 5 years, developers built close to current demand growth and near the middle of high and low immigration scenarios estimated by the Harvard Joint Center for Housing. CBRE investment management demands project for the next 10 years assume a 2 million home shortage today, near the lower end of most estimates, and at an additional 200,000 homes will be built per year in addition to the demand due to population growth and replacement to close the gap within 10 years. So on one hand, we're saying that people are buying, inventory is low, but the inventory is overall low and it cannot keep up. And this is for the next 10 years. The builders cannot keep up with the demand. So we're going to get into the foreclosure, the big foreclosure world. Is the foreclosure coming or is it not coming? On one hand, yes, the foreclosures are coming, but when you talk about demand and the inventory being so low, even though it's higher than last year, it's still lower than norm. So what are the talks in Florida? What's the foreclosure crisis going in Florida right now?
So that's a great question. It goes along with what you're saying about there being still a shortage of homes.
Mm-hmm.
Yes, year over year, foreclosure amounts in Florida have increased,
Right.
but not to the point prior to the pandemic, and nowhere close to when we had the financial crisis back in 2008.
Mm-hmm.
So in a way, this is another thing that is happening in which things are in a way balancing themselves out.
Right.
And that extra inventory that may come from these foreclosed homes or these REOs that the banks are now taking possession of are going to balance maybe that shortage that exists with current real estate.
Right. And also, there's not a lot of foreclosures. And I have some friends calling me, hey, Mike, find me a foreclosure. You know what I tell them? Call me in 2 years, maybe 3. And I joke with them because there's no foreclosures. But here's another thing that's happening. Even if there are foreclosures, what the institutions are doing, and when I say institutions, banks, lenders, credit unions, B of A, Wells Fargo, and I'm not naming anybody, but what's happening with foreclosures, which has been happening all along, but the cat's out of the whatever you call it. What's happening is if the bank or a lending institution has foreclosures, let's say it has 500 foreclosures, they're not putting it on the market in the multiple listing service or on Zillow or on Redfin or on Realtor.com. What they're doing they're selling it to private equity firms. They're selling it to Wall Street. They're selling it to Blackstone, companies like that, because the banks is a bank. They make money lending you money and charging you high interest rate. They're not a property management company. The last thing they want to do is manage 500 properties. So instead of managing each property, calling Ivan or calling Mike to sell their properties, they don't want that. They'll call Blackstone, they'll call Wall Street, they'll call private equity firms and say, look, I have 500 homes. It's worth $20 million. We'll give it to you for 17 million in 7 days, close escrow. And guess what? They do that. Mm-hmm. So even foreclosures, if they come out, which is very, very low, to the buyers, to you and me, they're not coming, at least for the next 2 or 3 years. Because even if they hit the market or hit the banks, institutions are buying it. And what do institutions do? Well, here's a big movement, and this is side topic, what I'm talking about. The next wave, I don't know if you know, but do you know what the next home American dream is, Ivan? And this is, quote, unofficially official.
The next home American dream.
Right. You know, it used to be the American dream is to own a house, right? That's not a dream anymore. That's dead. What's the new dream? Mm-hmm. I'm putting you on a spot on this one.
Yeah, no, I don't know. I'll be honest, transparent.
If you don't have a house, what do you end up doing?
You end up renting it, well, living in it or renting it out as an investment.
Okay, but as a buyer, if I cannot afford a home, I'm going to rent, right?
Right.
That's the new American dream. So the new American dream, unofficially official, is to rent a home or be able to rent a home. And a lot of the people are not being able to afford the home. And where I'm going with this, guess why institutions are buying all these homes? Blackstone, from what I understand, has over 40,000 homes nationwide. I talked about this last week, and I'm going to talk about it again. There are private equity firms forming right now, and they have been around, but there is one in specific has formed and more forming. Their objective is to buy these homes and never sell them and always rent them. That's number one.
Mhm.
The second thing these private equity firms are doing is buying land, whether it's Arizona or Tennessee or Florida or California. They're buying acres and acres of land. What they're doing is building apartments on one end, building condos and townhouses, building single family homes, 500 homes, 300 homes, 100 homes, 500 apartment units, 500 condos. Guess what? These guys are building it, developing it, not selling any of that. The new system, the new wave is they're renting it out. And that's why these equity firms are buying homes at an alarming rate, because the new trend is the dream is renting, not buying a home, because they can't afford it. At $85,000 household income, you can't buy a house today. 60% of US households cannot afford to buy a house. And it's getting worse because guess what? Tariffs is hitting, maintenance cost is high, labor cost has gone up. I mean, have you gone to Starbucks? My drink that used to cost $3 2 years ago is now costing $6. I stopped going to Starbucks. I'm a cheapie, but you know what? Be frugal. You want to get rich, you got to get frugal. So what's happening is the whole housing industry is changing. And I hate to say this, but the dream is, it's a twofold dream. The new American dream is twofold. One, pay off your debt and then get a rental. Forget buying a house.
And and to your point, there's challenges when it comes to purchasing homes, and definitely Americans are having to be much more mindful with how they spend their money.
Right.
It's interesting that we're having this conversation because last week I was talking to a lender friend of mine, and we were talking about the same scenario. You know, it's challenging for people to be able to afford a house. Not impossible, but challenging. And I was asking him, and I said, his name is William, and I said, William, so what are some things that you're doing to help out folks that want to purchase a home, want to buy their own piece of land and property? How are you helping them out? And he said something that I was actually very interested in. And he said, one of the things that I position is when we're at prior to closing, and yes, there are seller concessions, seller credits, but apply those seller credits towards the costs of finance in rate buy downs. Because
Right.
rate buy downs, even if it's reducing by a quarter point, 2 points, that is going to reduce the amount or total amount of what's being financed. And remember, when it comes to seller concessions, for instance, or seller credits, actually, in this case, those seller credits cannot be applied towards down payment amounts. So they have to be applied somewhere else. Could be maybe to the price of the home, or it's much better if they're applied towards the points, the percentage points, and the interest rates, because it's still reducing the monthly payment that people are going to have to pay for their homes. With that being said, it's going to reduce the total amount. And you said, 85,000 annual median income in America.
Right.
However, if you're able to reduce your monthly expenses, you could be looking at a clearer pathway towards owning a home. But yes, to your point, there are challenges, and also there's, you were saying how there's now pooled ways to invest in real estate. And I found particularly interesting that Lennar, one of America's top home builders, one of the things that they're doing is they are positioning pooled investments to have investors that maybe are not wanting to own an entire home, because there's some people also that want to invest in real estate.
Mm-hmm.
Maybe they don't have the ability to invest on purchasing one piece of real estate.
Right.
So there's a lot of investors that what they're doing is they're offering opportunities for pooled real estate so that they can own the homes and provide that that benefit to other people that might only be able to rent at the moment. So it's
I see.
interesting things that are happening.
Right. It's like what you call fractional investing. That's what they call it, fractional.
Yep.
Yep. Yeah, it's happening. And sorry to say that, but this is what's going on. So the rental market, if you're an investor, if you're a seller, and if you're thinking about selling, and if you cannot sell your home because you want the higher price, but if you are able to buy something, you may want to keep this home that you have, maybe with 3% or 4%, rent it out, and then the cash flow that you have, you can buy another one. There's options out there. I tell people, I tell my clients when they say, "Oh, I want to sell my house. I've been here for 20 years." I say, no. Try not to sell. If you really want to buy something that's comfortable for you, maybe not as big because you're now 50, 60 or whatever. Try to keep your home. That's my quote advice. Keep it home, because now rental property is going to be gold, because the new American dream is renting and not buying. But I also want to clarify something. People ask me all the time, and I've asked all the agents, if the prices are so high, if the rate's so high, why are there still home sales going on? I just sold a house. It was an R3 lot, 3 homes on a lot. They were asking for $2 million. When we made an offer, there were multiple offers on it. So where are the people getting money? And here's where a lot of the money is coming from. Of course, if I'm an owner for 20 years here, if I sell, I'm going to buy another one. A lot of that is going on. There's a lot of money. There's a lot of money that the boomers have. Boomers are passing away. Boomers are moving to smaller homes. They want the single story home. They want to go to Arizona. They want warm weather. They want to go near their kids. They're selling the big homes, buying smaller homes, and giving the money to their kids. This year, I've sold 3 properties, all over $1 million, because that's a normal price over here. And all 3 properties, 2 of them were single gals. One was a couple. And each one, mom and dad gave them $100,000 each as down payment. So people say, well, market is slow, prices are high. Where the heck are the people getting money from? Well, if they didn't sell their home or had to sell their stocks, a lot of the techie people have a lot of stock money. Nobody talks about where the boomer money is coming from. There is about $40 trillion worth of boomer money coming into the market in the next 10 to 15 years.
Yes. And those are promising signs. Absolutely.
Good signs.
Down of wealth is very good. And it's interesting that you mentioned something that I was having a conversation with a brand new agent and said specifically about the constraints that there are for brand new people to purchasing real estate, let's say first-time homeowners. And I said to this brand new licensee, I said, one of the things that you could always position is multifamily investments. Why? Because if the applicant is well qualified and if they're trying to own their first time home, one of the things that they could do is they could look at a multifamily, have a lender that approves them also on a DSCR loan where they see the potential of what the other units within that multifamily are going to get for rental. And that's going to increase the likelihood that they're going to get approved for that loan. So that first-time homeowner is going to be able to live in one of the units, rent the other units out to pay the mortgage payment. And with that extra income, it's possible that they could also have discretionary income to begin investing into another home.
Right. Absolutely. Yeah, that's a good way to do it. I mean, there's a lot of duplexes out there. I mean, even here in Orange County, people are buying homes, a 3 bedrooms or a 4 bedroom. They live in one, leave one as a guest bedroom or sewing room or yoga room or whatever, and they're renting out the other 2, and they're getting $1,000 a month just for a single room. No kitchen allowed, no kitchen and no parking in the garage. So if I'm a senior buyer, or if I want to buy a house, get rental money, if my mortgage is $5,000, if I'm renting out 2 rooms, my mortgage is $2,000. And that's going on right now. And now in California, they're also allowing, of course, check with your local county. They're also allowing you to build extra units in your back, which is called the ADU. So a lot of people are building the ADU, accessory dwelling unit, selling it or renting it out and getting a lot of money. Or at least in Southern California, many cities are allowing to convert the garage to a living area, and a lot of people are renting that out for $1,500, $2,000 a month.
Yep.
Because if you have a 3-car garage and you convert it to a living room, put a bathroom, they make getting money.
Absolutely.
Legally, they're doing it. So check with your city, check with your county and state what they allow. But a lot of things are happening. There are alternatives. Rental is where the money is going to be made. So if you have a house, 2-car garage, 3-car garage, convert it and rent it out. That's what I would say.
Yeah, no,
So,
it's and there's also an interesting trend, especially because as we're approaching 2026, so the world's biggest event is coming to the United States, and that is the FIFA World Cup, the soccer World Cup. And one of the trends that I'm noticing is that a lot of investors are preparing for that, and are preparing for two things: either people that are going to need lodging while they're here for the World Cup, or those individuals that are going to be legally able to stay and decide to live in the United States after they come for the World Cup. And that's going to increase the demand for housing.
right.
So those are also things to look at and look into. And but to your point, rentals is going to be a market that is going to stay very strong.
Right.
Especially if you're thinking about investing money right now, it's good that you begin to have conversations with your real estate professionals,
Right.
related to that and how you can make that a reality.
Yeah, that's a reality. I watch golf a lot. And, for those of you who watch golf, Augusta is one of those premier golf tournaments every year, right? It's in April in Augusta, Georgia. Homes over there for the weekend rent out for $15,000 to $20,000 for a week or so.
Mm-hmm.
Not to the players. They pay $30,000, $40,000 because they are huge mansions that they rent out. All the hotels are booked. Regular homes for the weekend go for $10,000 for the weekend. These are regular homes up to 15, 20-mile radius because there's so many people coming there. It's a signature event for golf.
Mm-hmm.
I've always wanted to go, but I could never get a ticket. It's that high of demand. So I totally understand when you say FIFA is coming. What's the dates? It's the 2026?
It's 2026. It's from June. Don't quote me wrong don't quote me 100% on this one, but it's June 15th till July 17th. As a matter of fact, this week the pre-sales already started. You have to apply for a ticket, and this week I applied for a ticket just to be considered to potentially buy a ticket. I don't know yet. I will be let know November 7th.
Right.
But it's that high of a demand across the world.
Yeah, it's a big event. Yeah,
it is.
Maybe I should apply and buy a ticket, then sell it and make some money. I should do that. I never do that, but I should. And it's all over the nation, right? The teams are different places, right? So I know they're playing. I know they're playing at the SoFi Stadium here in Los Angeles, the big new stadium. So I know that there's a game that I don't know which game or where the finals are, but I know they're playing at SoFi, and somebody I know has been trying to get tickets for it. Maybe they've already applied.
48 countries. 48 countries are going to be United States, Canada, and Mexico. So there's
it's a big event. It's a huge event. One of the highest watch events, more than football. So nationwide. So let's switch some gears and talk about some foreclosures. And according to Adam, the company is called Adam. It's a data management and analysis company. U.S. foreclosure activity increases annually in Q3 of 2025. This article is brand new, not brand new. It's about 2 weeks old. Came out in October 2025. Let's see what they have to say. Foreclosure starts see annual increase of 16%. Bank repossessions up 33% from previous year. So there are foreclosures out there. It's under the radar, but they're out there. Let's see what else they say. On October 9th, Adam, a leading curator of land, property, and real estate data, today released its Q3 2025 U.S. foreclosure market report, which shows a total of 101,500 U.S. properties with a foreclosure filing during just the third quarter of 2025, up less than 1% from the previous quarter and up 17% from a year ago. I think 17% is a pretty big number, isn't it?
It's a significant increase, and I was looking at those stats as well not too long ago. And
Uh-huh.
one of the things I can tell you is that even though the numbers are increasing year over year, they're not to the same level as we had prior to the pandemic or the 2008 financial crisis. So at least on that regard, I think that it's mostly cyclical that's
Mm-hmm.
happening. And one of the things that's also we're seeing is because of rising or folks that are getting laid off, then that's going to place constraints in those individuals that can pay mortgages. The cost of living has also gone up. So that is creating that kind of tension, however, not too alarming rates as we saw prior to the pandemic.
Right, right. And also you have to keep in mind that these are not foreclosures, these are foreclosure filings.
Yeah.
That means if you get behind 90 days, right? If you
Yeah.
get if you get behind on your mortgage payment 90 days or more, they file a foreclosure. And then if you cannot pay up, then they file for a foreclosure auction,
Hmm.
right? So this is just a process, and a lot of these people can negotiate with the bank. They can negotiate their payments, get forbearance, or reduce their payments and work something out. And a lot of this will happen, and a lot of these will not go to foreclosure. But even though they cannot make the payments, I'll give you an example. Let's say I bought a house for $400,000 3 years ago. Now my house price went up 20%. So the 400 times 2, 80,000, right? So my house value is, let's say, $500,000. I lost a job. I cannot make the payments. So I'm behind. So even though the bank may file a foreclosure, I can sell it. So I haven't paid for a year. My payments, let's say, was 2,500 a month. So when I sell it, I paid 400. I'm selling it for 480. I still have $50,000 check coming to me after the commissions and escrow and title. Out of the $50,000, I pay off my $24,000 bank payment behind and penalties. I still have $20,000 check left. So it's not going to be a foreclosure. I'm going to walk away, possibly with a zero balance check or some kind of check. So
Hmm.
foreclosures are not coming. I mentioned earlier,
Yeah.
I told my friend, hey, call me in 2 or 3 years. I should tell him to call me in 4 years because I don't see foreclosures coming, at least in Southern California, for the next 2 or 3 years. Maybe in Texas, maybe in Tennessee, maybe in Arizona. That's a different situation because a lot of those foreclosures that are coming are, you know what the funny part is? Most of these foreclosure filings are, number one, with first-time home buyers who bought in 2022, 23, 24, and who bought either VA or FHA government loans and who put very little down
Hmm.
and who had very low FICO scores. That's the stat, which nobody talks about. But I read a report, and that's where it's at. So what happened was the banks. Remember, banks I mentioned earlier are in it to make money.
Yep.
They will push and shove to give you a loan. They want to give you a loan. 660, 650 is a good FICO score. But I heard that a lot of FHA loans, and this will shock you too, Ivan, a lot of FHA loans were given, guess what, at 580 FICO scores.
They do have a lower threshold, and to
Mhm.
your point, it's causing, or at least that's one of the reasons that's causing the increase in foreclosures. One of the things that it's also important to highlight is over 50% of homes in the United States have equity, which means, and exactly the demo that you described, if someone is unable to make their monthly payment,
Mhm.
they can still tap in and sell their home, tap
Right.
into some equity to at least get out of the home in a
Mhm.
safe way without executing any kind of foreclosures.
Right.
I was reading also that there are some homeowners that prior to in that time frame, 90 days, depending on your market, some markets are 120 days, like here in Florida. But in that time frame, you could still hand over your deed to the bank so
Mm.
that it doesn't go through full foreclosure, but the bank now has the property as a real estate owned property. And then what you said is they end up reselling the property to investor groups. So at least it doesn't go down, doesn't go out as
Right.
foreclosure. There's still a lot of people that are thinking outside of the box to avoid that, which is good because it's helping with without having to go into any kind of crisis when it comes to
Crisis.
foreclosure.
Right. Yeah. And what I was telling, there was a report out back in August or September that I read that there was up to 2 million homes were in foreclosures, and most of them were FHA or government loans and VA loans, a major portion of that.
Interesting. Yeah.
Yeah. So and a lot of these will be corrected and move on and correction. Let's look at nationwide starts here. A total of 72,317 U.S. properties started the foreclosure process in Q3, up 2% from previous year and up 16% from a year ago. States that had the greatest number of foreclosure starts in third quarter include Texas, Florida, California. Holy crap. Illinois and New York. I'm surprised to see California there, but hey, I'm from California. I also know that there was a big price drop in one of the cities in California. It hit the top 50 cities where there were major price drops, and one of them was Bakersfield, California. So I'm assuming a lot of foreclosures are there. And if you look at it, 7,800 is really not that much. When you have so many homes, I don't know what the population is. California is what, 40, 50 million?
Yeah.
And when you have 7,000 homes in foreclosures, and these are foreclosure filings, not foreclosure. Remember, look at the stat, the heading. It's foreclosure starts, means foreclosure filings, not foreclosures. Big difference. I would say more than half of these will be curated or, work something out or renegotiated, and the sellers will walk out.
Look at the graph. Look at the graph that you have on your display. If you compare, because we see that dip. That dip is right at the
here?
pandemic.
This dip here?
Yeah, that dip is right around the pandemic. And as it starts to go to normal levels, but if we compare it to prior to the pandemic, those are much higher. So I'm also in agreement with you. I don't expect there to be a crisis when it comes to foreclosure. Maybe if anything, just normal trends, but no crisis.
No crisis. Right, because if you look over here, back in 2018, it says there was 100,000 foreclosure filings, not foreclosure filings, right? In 2020, it went down.
Yep.
Okay. Now it's coming up. It's the highest in the last 5 or 6 years, but it's still lower than 2014 or 2018. But let's just compare. And I don't know if you were here during the pandemic, if you were doing real estate or not. Not during pandemic, during 2008 foreclosure. I was there. Look at there. Almost 600,000 foreclosure filings.
Yep.
And I was there. So if you look at that, and I see a lot of YouTube videos from some of these YouTubers. They want, they do YouTube, by the way, to gain viewers. They keep saying, "Oh, market crash is going to be worse than 2008." I just saw one 3 months ago, and this guy has over 100,000 subscribers, and he's lying to his viewers. There's actually a title on his video. It says, "This crash is going to be worse than 2008." Look at the graph. What is he smoking? I mean, according to this graph that we're looking at, there's no way that's going to happen. We are here, and look at where 2008 is.
Yeah. I don't foresee any change.
Don't believe what I'm trying to say is don't believe everything you see in YouTube and Facebook and Instagram. Watch 2 or 3 and then make your decision, because a lot of fake news out there, a lot of fake reports out there, a lot of people say things to get views because they make money on advertising and sell you something. So be forewarned. Now that I have my own YouTube channel, I'm learning more about this. I used to think, oh my God, look at this guy. He has 100,000 subscribers. He has 500,000 subscribers. But I'm following 5 of these real estate gurus, and they're all buying viewership. You can go to their channel. I won't mention it out of respect, but their headings are: foreclosure is nearing. It's going to be worse than 2008. It's going to be like a depression. Sell now before you lose your home. Wow. Sorry to say that, but these things are happening, and I'm just surprised that this happens.
Yeah. The numbers don't lie. So
numbers don't lie. It's not going to happen. That's why I told my friend when he called me back in 2 years. Maybe I should have told him, call me back in 3 years, at least for Southern California. It ain't going to happen, So let's see, where was I? Let's look at one more here. I'm going to go back, and I'm sorry to say this, but Florida has been in every article that we read. Worst foreclosure rates in Florida, Nevada, and South Carolina. Nationwide, 1 in every 1,400 housing unit had a foreclosure filing in just quarter 2025. States with the worst foreclosure rates are Florida, 1 in every 814 housing units with a foreclosure filing, Nevada, 1 in every 831, South Carolina, Illinois, and Delaware. Among the 225 metropolitan statistical areas with a population of at least 200,000, those with the worst foreclosure rates in 2025 were Lakeland, Florida, 1 in every 470 housing units, Columbia, South Carolina, Cape Coral, Florida, Cleveland, Ohio, and Ocala, Florida. What's up with Ocala and Cape Coral? Do you know those areas?
Yes. So one of the things, the interesting patterns that's happening is that those areas right after the pandemic and right after there were lower interest rates, they began to see a heavy amount of migration, which, because of so much demand, it superficially increased the prices of homes in that area. And if we look back at the fact that interest rates after 2024, 2023, 2024 were increasing, that allowed for a perfect storm of buyers coming in, buying because of fear of missing out.
Right.
And that artificially brought the prices down. And now we're starting to see a correction of those individuals that right now, unfortunately, can't afford the mortgage payments. So we're seeing those foreclosure filings happening.
Right.
The beautiful thing is that this is the way I see it. And, it's unfortunate that people are having to be displaced from their homes in those scenarios. But overall, in the market, in the great scheme of things, it's normalizing and balancing the market to a price that is much more true about what there is to offer here in Florida. And it's balancing things out to make it a level playing field for sellers and buyers.
Right. Because in 2024, because I did a video why people were leaving Florida, and in the video I mentioned that for the first time in a lot of years, in maybe 15 years, the net migration was negative than positive for the first time. So more people moved out than more people moved in. That happened in 2023, I believe, or actually in 2024. There was a net loss of migration, but maybe this year is going to come back because a lot of people moved out. They sold their home, got a higher price, and a lot of them moved to actually North Carolina, South Carolina, and Texas. Those were the 3 states they migrated to, at least the majority of them. So I don't know what the reason was, but a lot of people made money, took the money and bought cheaper homes and saved their money, and maybe they gave it to their kids or bought rental properties or stocks or whatever. But hopefully they did something good with it. So let's look at the completed foreclosure. Now these are homes that actually foreclosed. Let's look at 2025. Look at it. It's like what? Not even 10,000.
Yeah.
These are actual foreclosures. And guess what? We never saw them because where did they go? Where did all these foreclosures go? Private equity, Wall Street, Blackstone. We never saw it, and we're not going to see it. Average days to complete foreclosure. It's taking 600 days to close a foreclosure. That means they are negotiating, pounding, so even if somebody files something, it's going to take a year, 2 years to come out of the foreclosure. We won't go there on the timing, but, let's look at some stats and then we'll call it a day from there. It says here, September 2025 foreclosure activity, high level takeaways. Nationwide in September, 1 in every 4,000 properties had a foreclosure filing. States with the highest foreclosure rates in September were Florida. We went through this. Delaware, South Carolina. 23,761 U.S. properties started the foreclosure process in September 2025, down 2% from the previous month and up 20% from September 2024. So it did go up significantly. Lenders completed the foreclosure process on 3,780 U.S. properties in September 2025, down 7% from the previous month, but up 44% from September 2024. So quite a high number, but they're being sold. So it doesn't come on the market.
Yeah, absolutely.
Yeah. So let me remove this. So I had a question. So if you're a seller and if you still need to sell this year, what's the one pricing strategy that's still working in your market? Because obviously Some areas home prices are going down, some areas home prices are going up. So if you're a seller, what strategy would you use? Make a comment or let us know or share with other viewers, because like I said, this video on live, but a lot of people watch it as a recording because at 5 o'clock, a lot of people work, they can't watch. So they watch after it's recorded, and maybe they'll read on your comments and I'll reply back to your comments. So I hope this was helpful. You have any last comments, even last take to our viewers here?
Yeah, no, again, thank you for the opportunity to be here with you. And the beautiful thing about real estate, with my experience in the 8 years that I've been in the business, is there's seasons. And right now, the season that we are going through is the season in which we're starting to see a balancing. And it's going to be an equal playing field for people. We're also seeing that interest rates are slightly starting to come down, not in a whole considerable amount, but that's going to help. And this is where it's very important that you pair yourself with a knowledgeable real estate professional that can guide you through the information, similar to what Mike is doing here. Mike is educating, and that's what's important in your neck of the woods. Find someone that knows the statistics, knows how the market is being played out, so that they can guide you with the solutions, maybe sometimes thinking outside of the box, like some of the strategies that we came over here, so that you're able to have a better opportunity to buy real estate or be educated and informed on when the right opportunity for you is going to happen. So
Right. And on that note, thanks for letting me know. Or I have a network of agents, top 5% of the agents nationwide. I have a network. So if you are looking for an agent, just to talk to them, hey, what's happening in the market? What's the trend? If you just want to talk to them, let me know. Send a direct message or comment below, and I'll refer you to them. There's absolutely no obligation to you. But these are agents who are experienced, who's been around, seen foreclosures before, know about foreclosures, knows about the trend. He's not just another agent out there doesn't know what they're doing, because a lot of agents out there don't know what they're doing. So you have to be very careful with who you talk to. So I'll be glad to refer you to those agents. So what I want to say is, of course, the market is local. What we talked about with me and Ivan and we talked about was the general numbers, average numbers, medium numbers. What's happening in Florida is not what's happening in Southern California. What's happening in Tennessee is not happening in Texas. So check with your local market. What we talk about is in general, because we have such a wide area and such a wide viewership, but the market is local. Your season is local. For Denver, for example, if it's cold, maybe they won't have any sales, or in Montana, they might not have any sales. California in December, it's still good weather and there are home sales going on. So the market is local. So keep that in mind. With that, I want to thank you for watching. If you have any questions or comments, let us know. And Ivan, I really thank you for coming on board. I hope you come back again if I invite you, and I will invite you. I hope that's okay with you.
of course, yeah, no, I love being here, and I really like educating the consumers. And the invitation is the same for those of you that may be in the Florida market. If you need some experience, I have a wide array of agents as well that we can now tap onto. And the idea is to make more informed decisions. So
right. Can you give us something? I know you didn't talk about it, but I know you're very, very involved in NAHREP. Could you tell us a little bit about, take a minute, and so that the viewers know what it is and what it does and how you're involved in there?
So the NAHREP is the National Association of Hispanic Real Estate Professionals. We are an organization that started 25 years ago by a gentleman named Gary Acosta. And the idea was to set up a trade organization that was going to promote the interest of Latino real estate professionals. In that time frame, interesting things started to happen, especially with the Latino market. So a lot of Latinos started to migrate from South America to the United States in the look for better opportunities. And thus they brought their money to the United States, and they looked at real estate as a way to be able to invest that money. One of the things that's happening is that out of 9 million Hispanic households in the United States as of 2024, 53% of them own real estate. And wow, the number is increasing. So for that reason, our organization attracts pretty much all demographics. And we're very proud of that. And we're also proud of the fact that not only are we supporting real estate agents and real estate brokers, but we're supporting mortgage companies, trade organizations, we're supporting title companies, we're supporting anything that surrounds the process of a real estate transaction. And that's bringing a lot of networking. It's also bringing a lot of small business owners that are seeing the value, in investing into the Latino marketplace here in the United States. And we are very proud of how much we've grown, and we're still continuing to grow. So it's great.
Right. Okay. Is it in every state, or is it like only in certain states, or how far out are you? Oh, sorry.
It's almost in every state. It's not in every state, but we have around the country over 120 chapters, and our membership nationwide is over 41,000 members.
Wow.
So we're a pretty
Amazing.
large organization. My chapter, which is the NAHREP West Broward chapter, we have a following of over 5,000 members. And here in South Florida, there's 4 chapters.
Okay.
Imagine that. We're one of them, and alone we have 5,000. So
that's huge. That's a huge impact. Yeah. Right. Okay. Cool. Well, thanks everybody. We'll see you next Tuesday at 5 o'clock California time. Thanks again.
Thank you, Mike.
Okay.